I think the biggest thing we've been looking for is forced selling. So as we saw in the summer with the Terra Luna collapse, there was a lot of forced selling of Bitcoin because Bitcoin was the collateral and the reserve used to issue the stablecoin. Then again, with the Three Arrows collapse, we saw more Bitcoin forced selling. With the FTX situation, we didn't see massive sell-off in Bitcoin. And the reason why is a lot of the lending collateral that was used by FTX to secure cash was, in fact, their own token, FTT. So really what we're looking for as we go into the new year is where's the remaining pockets of forced selling that may happen as firms go into forced liquidation, Chapter 11. I think we've seen the largest failures so far. I mean, you can't get much bigger than FTX, DCG, Genesis, some of these very large firms that have had liquidity, credit issues. And so as we go into the new year, I don't think there's a lot of forced selling remaining, which is optimistic. But again, I think the upside is quite limited because we also don't see a lot of new inflows coming in. If we look at structured products, last year was a year of net outflows when it came to crypto structured products. This year I expect will remain flat. I don't know if there will be large material inflows from either retail or institutional investors.
And as you sort of survey the market, are there any points of stress you see in the system across the board? I've spoken to people who say, well, we should be keeping a very close eye on stable coins and any potential runs or collapses in that space. Where do you see any potential kind of stress going forward?
I'm not as concerned about stable coins. We've had stable coins. Tether's been around for a decade now. We've had USDC for a fair number of years, and those reserves are backed by highly liquid assets. I think what I'm more concerned about is some of the smaller exchanges, some of the smaller lenders, some of the smaller market makers and OTC desks where there just isn't a lot of visibility. I think there are a lot of small firms within the crypto space that are really quite material, and so it'll be interesting to see how those fare. But I think by and large, the largest firms have sort of struggled. I think the other thing we're looking out for is not necessarily on the market infrastructure side, but we are seeing a lot of firms that are venture-backed firms that have raised a lot of capital, running out of capital, perhaps running into issues, needing to shut down. So we're keeping a close eye on the M&A landscape as well as any forced business shutdowns.
And as you look at the market right now, you said there's not a lot of upside potential. I mean, as you assess what's going on, we know Bitcoin continues to kind of be quite closely correlated with other risk assets, in particular the NASDAQ. We had the CPI print. We saw a little bit of a bump there for stocks and for Bitcoin as well. What is your outlook for Bitcoin this year? How high or low can it go?
Well, you know what they say, you can name a date and not a price, so you can name a price and not a date. So look, I think Bitcoin this year remains fairly range bound. I think top of the range, likely 25 to 30K. I think bottom of the range, we've already seen it around 15 to 20K. So I think we'll trade within a fairly narrow range, but there could be catalysts that we're not aware of. Again, the macro situation, the political environment is fairly uncertain. Inflation continuing to run quite hot, I think is a new thing. We haven't seen that, in 30, 40 years. So who knows, as people look to make allocations going into the new year, where crypto will fit into that portfolio. But I do think, unfortunately, the events over the last really 6 months have caused tremendous reputational damage to the industry and to the asset class. So I do think it will take some time for that confidence to return.